Hey guys, today I just want to talk to you guys about the four different types of stock orders that you can place. Now, when you want to place a stock order, you probably notice that it says you have the options of doing a market order, a stop order, a limit order, and then a stop limit order. So I'm going to try to go through all four of those with you and kind of explain those in detail and the differences between them, and hopefully make it a little more simple for you to understand. Than a few other instructional things that I've seen out there that can kind of get confusing if you don't really understand how they all work. So let's try and do those quick. All right, so the first one we're going to go over is the market order. The market order is the easiest of all the orders by far. All a market order is really saying is that you want to buy a certain stock for a certain amount of shares at the current market value. So if the current market value is $5 a share and you put in to buy 10 shares, then you're going to get 10 shares at $5 a share. The guarantee that you're going to get when you put in a market order, the guarantee is that you're going to buy 10 shares. You are not guaranteed to get it for $5 because when you put it in, if it's at $5 at that point, when you put it in, it does process. It could very well have jumped to $5.10. Or it could have gone down to $4.90 or something like that. So it could be any of these and anywhere in between. It's going to be pretty close. You got a pretty good ballpark of where it's going to be, but you're not guaranteed a certain price. You are guaranteed that you're going to buy the shares that you want to buy. So that's kind of how a market order goes. And like I said, that's the simplest of all of them. The next one I want to go over is the limit order. The limit order isn't too difficult to understand. Makes a lot of sense once you can get it. Basically, I'll show you a buy and a sell. So when you're buying, let's say that the current value of the stock is $5. The stock has potential to go up, potential to go down. So currently it's at $5. Now you're going to use a limit order on a buy when you want to purchase the stock at the best value you can, which means you're going to get the best deal. And that's all a limit order really is saying, is that you're going to place an order so that you can get the best deal that you want. So for a buy, you're going to be saying, I want to buy this at this price or lower, because obviously you want to buy low. So you're saying, well, I only want to buy this stock, let's say down here, if it sells for $1. So at any point, if the stock value crosses this line here, this limit line, you're going to buy it at that point. You're going to buy it for this amount or less. So any of this area in here, you're going to be able to buy it for, if at any point it crosses down to that. Now sell, obviously, can be just the opposite, because when you're selling a stock, you want to sell it high. So again, if it's currently at $5 a share, then what you're saying is, well, I only want to sell this stock if it ends up at $10 a share. I want to get the best value for the stock. I want to get the best deal. And again, for selling, the limit is going to say, okay, I want to sell it for if it hits $10 or more. That is the limit orders. All right, now we'll go over the stop order. So buying, let's say once again, is selling for $5 a share. Currently, potential to go up, potential to go down over time. The stop is going to kind of act the opposite from a limit order. But the key thing to remember is that a stop order suggests a certain type of market. What I mean by that is you're only going to place a stop order when you think that the market is trending either in a good direction or in a bad direction. So on a buy, you're obviously going to want to buy a stock if you feel that it's trending in a good direction or if it's trending towards a bullish market. So what this means is that you're saying you're only going to buy this stock if it goes up to $10 a share. Because at $5 a share, you don't think it's doing so well. But if you see the stock start to rise and hit $10 a share, then you think it's a good stock worth buying. So at that point, you want to buy the stock. So when you put a stop order on this stock, you're saying that I want to buy it for $10 or more. Selling, you can probably figure it out. Basically, it's saying if you own stock, it's currently at $5 a share, you want to sell it if you feel like it's trending towards a bad market. So if it hits $1 per share, you're saying, I feel like this stock is headed in a bad direction, I want to sell it. And you'll sell for $1 or anything less. final one is a stop limit order. A lot of people get confused like this because it's the stop and the limit put into one word, but actually it's pretty simple. It is just simply combining the two types of orders. So a stop limit order is just combining them. Once again, stock is selling for $5 a share and you are wanting to buy it. The reason stop is first in this word is because the stop is going to engage the order first and then the limit is going to cap it off. What I mean by that is you're going to say, I want to buy this stock if it's trending towards a good market. Again, stop suggests the market. So when a buy, you're going to want to suggest a good market. If it's suggesting a good market and it hits $10 a share, then you want to buy it at that point. And again, you want to buy it at this price or anything higher. The limit comes in after that to where you're only going to buy it for anything under $15, let's say. You don't want to pay over $15 for it. So all this, you're only going to buy it for anywhere from $10 to $15. What that means, the reason you would do that is the market is suggesting a good market, which is good. You want to buy it at 10, but you don't want to buy it over 15. So if the market opens up one day and let's say the price is up here at $17 a share, you're saying, well, I don't want to pay $17 a share. I don't think the stock is worth that much. I think that it's probably going to come down again and kind of hang out in here somewhere. So you're not going to want to buy it at 17. So you put a stop limit on it. So you're going to get it right in the range that you want it. Selling is very similar. The only difference, once again, is that your stop is going to be down here. Stop is going to be down here, $1, let's say. Market is suggesting a bad trend, so you put a stop, $1 or less, and your limit is going to guarantee that it won't sell for under, let's say, 50 cents. So those are the 4 different types of orders, stock orders that you guys can place on stocks. I hope that was informative, helped you guys out. If you have any questions, just send me some questions and I'll do my best to answer them. Thanks a lot, guys.